Everyone, this is Modula and Podrick, and we will be informing you all about what is going on in the digital world.
Welcome to the future humans. Let's start.
Okay, so we're diving into a real head-scratcher today. It's this paradox with Meta. You've got a company betting its entire future on AI, right? They're spending an absolutely astronomical amount of money to get ahead. But here's the crazy part. Instead of getting a high five from Wall Street, they're getting punished. And I mean severely. This is a story all about that clash between long-term vision and a whole lot of short-term panic. Just look at this number, $200 billion. And to be clear, that's not their valuation. It's not their AI budget. No, that is how much market value Meta lost. Poof, gone. And get this, it happened in just 2 days. It's a staggering, almost unimaginable amount of money just wiped off the map.
So that brings us to the big question, right? I mean, everyone in tech is spending billions on AI. It's the thing to do. So what makes Meta so different? Why is their massive investment, which, let's be honest, seems like a pretty smart future-proofing move, causing this full-blown panic on Wall Street? What's going on here?
All right, Section 1, the $200 billion problem. To really get this, we've got to look at the one single event that lit the fuse on this $200 billion bonfire, and it all comes down to one pivotal and, as it turns out, pretty disastrous earnings call.
So yeah, it all came to a head during that one call. But here's the weird part. Their results were actually really good. I mean, a $20 billion quarterly profit? That's huge. But something that was said on that call sent these massive shockwaves through the financial world, and the stock just plummeted. It dropped 12% by the end of the week.
Next up, Meta's massive AI bet. So what was it that was so terrifying? Well, it all boils down to the sheer mind-boggling scale of Meta's bet on AI. Let's actually break down the numbers, because this is where it gets wild. Okay, these are the numbers that totally spooked investors. First, the company's operating expenses, the day-to-day cost of keeping the lights on, jumped by $7 billion. But then, on top of that, they reported almost $20 billion in capital expenses. That's the big long-term stuff like giant new buildings and super powerful computers. And this wasn't just some small increase. No, this was a massive surge in spending that hit their bottom line, and it hit it hard.
And look, this isn't monopoly money we're talking about. This cash is being poured into very real, very expensive things. We're talking about building 2 brand new, massive data centers. And of course, hiring the best and the brightest AI talent in the entire world, which, as you can imagine, does not come cheap. This is a serious long-term play for infrastructure and people.
All right, Section 3, Wall Street gets nervous. So that earnings call, it basically became the exact moment where Wall Street's quiet, background nervousness turned into a blaring 5-alarm fire.
You see, the analysts on the call, they really only had one fundamental question, and they asked it over and over in different ways. It was basically, okay, we see all this spending. When are we going to see the money? They wanted specifics. They were looking for a clear timeline, a roadmap. They needed to know when these billions and billions of dollars in AI investment would actually start bringing in some real revenue. But that is not the answer they got, not even close. Instead, Mark Zuckerberg started talking about the future. He described all this spending as unlocking a massive latent opportunity, something that will come when we get the new models. He was painting this beautiful picture of future potential, of what could be. And here's the crucial point. That answer completely missed the mark for the people listening. I mean, you've got to remember, investors live and die by quarterly results and concrete forecasts. So when they heard latent opportunity and when we get new models, they basically translated that to, okay, so you don't have a plan to make money from this yet. And that is when the panic selling really kicked off. Next section, and this is a big one, the missing product. Because this brings us to the absolute core of the problem. This is the real reason for all this anxiety. See, it's not just about the spending. It's about what all that spending has actually produced so far. Or, more accurately, what it hasn't.
And this leads to a super important question. You're probably thinking right now, hey, wait a minute, aren't all the tech giants spending billions on AI? And you're right. Google, Microsoft, Amazon, they are all in deep. So why in the world is Meta the one getting hammered for it?
Well, this is where you see the critical difference. Think about it. When someone asks OpenAI's Sam Altman about his spending, he can point to one single world-changing product, ChatGPT.
I mean, it's one of the fastest growing services in history, and it's reportedly on track to pull in $20 billion a year. That, a concrete product and real revenue that gives investors confidence. But Meta? Meta just doesn't have that killer app yet. And this also just highlights the immense pressure that comes with being a public company. Unlike a private company like OpenAI, Meta has to answer to Wall Street every 90 days. And right now, all Wall Street sees is a giant expense with no clear revenue attached. It's a tough spot to be in.
So what does Meta have? Well, they have a lot of promising experiments. The Meta AI assistant is out there, but let's be real, it's not seen as a true ChatGPT competitor yet. They've got a cool video generator called Vibes, but its business impact is, well, it's pretty limited. And then there are the new Vanguard smart classes, which honestly feel more like a part of their metaverse bet than a pure AI play. Look, they're interesting for sure, but they are not the blockbuster revenue-driving products that Wall Street is desperately looking for.
All right, final section. What's Meta's AI future? Because all of this leaves us with this huge question mark just hanging over the entire company. What exactly is Meta's AI endgame here?
And you know, even when he gets pressed on this, Zuckerberg's answer always points to the future. He didn't really highlight the products they just launched. Instead, he talked about building novel models and novel products and promised he'd share more when we have it. It's this incredibly consistent message of, hey, just wait, something big is coming.
So what could that something big actually be? Well, there are a few possibilities floating around. Are they going to leverage all that vast social data to build a true personalized ChatGPT competitor? Could this whole thing be a new entertainment play, using AI to totally revolutionize how we consume content? Or are his hints about business AI pointing towards some kind of lucrative enterprise service? Honestly, right now, it's anyone's guess.
But one thing is crystal clear. While Meta is busy trying to figure out its path, Wall Street is losing its patience, fast. That $200 billion loss? That wasn't a glitch in the system. That was a message. A very, very expensive message that the time for vague promises is running out.
And that leaves us with the ultimate cliffhanger, doesn't it? The clock is ticking, billions of dollars are on the line. The big question is, can Meta find its killer AI app before Wall Street's patience completely runs out, or is this whole thing going to become a cautionary tale for any public company out there trying to fund a long-term vision in a market that only seems to care about short-term results?